Good morning, everybody. It's the 25th of May here on a cloudy, wet Monday here in New Zealand. We've had rain all night actually, which will make the farmers really happy because we've actually had a long period of no rain and a lot of drought around the country. So that's good news for the farmers. All right, so this episode or video is going to be about headlines that I think are going to be coming up in the next 6 months. You'll see on the media. And I always like to play this little game. You try and think about what's going to be coming in the future. And as we see these headlines come through, you'll be able to just tick them off and see how correct or not I am. So obviously I won't get it all right, but it's always fun trying anyway. So I've made a bit of a list here, so we'll just start off that and just see how we're going. Okay, so the first one of the headlines I think is are we heading for depression? Now, I think that we're basically in one now, to be honest. But because when they do the calculations of a recession or depression, it's really the last quarter and the last quarter behind that because it takes two to work it out. So regardless of what we are now, you're not going to hear the result of that until pretty much Christmas time. So, you know, we're definitely, I believe, in a depression now, but you won't actually hear that on the news until, you know, coming up towards Christmas. So then you'll see things like, are we in a recession or depression? And then it'll be finally confirmed we are in a depression, blah, blah, blah. So watch out for those headlines coming up. One of the things I think you're going to see a lot of is people blaming the banks for being too generous and lending too much money. And just get this cat out of here. And so what happens is that in the good times, of course, banks lend a lot of money. And the better the times get, the more competitive the banks want to be with each other, and the more they lend when perhaps they probably shouldn't on people's income and exposure and everything else. So I think you're going to hear headlines such as like, why did the banks lend me so much? And you'll have a story of a husband and wife who are, thought they had it made 6 months ago and now they're broke and the bank's threatening to take the house away and everything else. So you'll see that kind of stuff, I think, coming more and more often. Unemployment up to 15%. Now, again, I believe that's the unemployment rate we had in the 1930s depressions. I think it's going to get worse than that. So when you see the figure to get to 15%, you know that we're in pretty bad times. Now, the government has predicted 9.9, which is quite funny, just under 10%. But so anything what the government predicts, you can almost double it. So definitely, I think we'll get 15, and it wouldn't surprise me if we get closer to 20. So it'll be interesting to see how that plays out later on as well. House prices down 20%. Now that's something that I'm pretty passionate about with property and stuff, and I think that in certain places you'll see a lot more than that. My view is that we're going to get somewhere between 20 and 50% depending on where you are. And places like Queenstown or whatever, you might see a headline like Queenstown house prices down 80%, and you'll get the odd house that got sold for $2 million a couple of years ago, and now it gets sold for $600,000 or something. Who knows? But it's going to be that kind of scenario where when you have people that must sell and you don't have any buyers, the law of averages tell us that you basically the price has to come down enough to make somebody who maybe wasn't going to buy encouraged to buy because of the low price. So that's what you're going to see, and it doesn't it's just one of those things that happens all in these markets. And those who don't need to sell, it doesn't actually matter what your house is worth really. You keep paying the mortgage, or maybe you got mortgage free, which is great, and therefore it's just a paper price, so who cares? But for those who are in trouble and those who are relying on the equity in their house to get them out of trouble, they're the ones that have a difficult time. So just be wary of that. I think another thing you'll see a lot of too is like I've got here, people lose their deposit in a housing development. So obviously we've had a lot of developments coming on strong of late, and what you'll see is some of those will go tits up basically. And so if you put money in a deposit in a development that hasn't started yet, or maybe is only halfway through, banks are going to be very, very, very cautious on lending money, that kind of thing. They certainly won't lend it going forward, but the ones that are already out there, they might find that they'll actually stop. So you will see people that have maybe put their life savings, a deposit in a development that's supposed to be maybe finished next year, and they find out that the company goes bust and their money that should have been in a trust wasn't, and they lose it all. So that'll be one that I think keep your eye on for that one. Soup kitchens can't keep up with demand, so you're going to see a lot more of that kind of demand scenario where your food banks, your soup kitchens, all that kind of stuff are just going to be run off their feet and just never seen so much. And you can see it now. They're going to interview a person that might have been an Air New Zealand pilot or a doctor or a lawyer or something, something high, right up there that you'd never ever think need a food assistance, and then they will be, they'll make headlines, and you'll see that kind of stuff. They'll play on that. Food prices increases, and again, I think you'll see that over time, food prices in supermarkets will slowly go up, and there will be a headline over that sometime, and people moaning because why food prices have gone up. So you'll see that one. Unfortunately, a sad side to all this is that obviously I'm sure you'll see headlines soon. Suicide rates gone up, because that's always a sad side of this kind of downturn. Divorce rate, I think, was also going to go up. I think the lockdown has been very, very hard on some people, and some people that might have been in a situation where it wasn't that good to start with, that might have just made it worse. And some people it's been great, of course, and it's been great time to. I've heard stories of people, it's the longest time they've been with their partner uninterrupted, so that's great. But I think there is going to be a scenario of divorces going up. Baby boom coming, obviously that's a scenario where suddenly you might find all these people pregnant over summer and having babies, so that could be a big baby boom spike maybe early next year. It'll be interesting. Obviously crime is going to be going up. I've got crime up 40%, and I think that's probably on the underside. So definitely in the lockdown there was a lot more crime activity in industrial places, not so much in houses because people were in them the whole time, but definitely industrial places. So just keep an eye on that. And you want to make sure that your security is right up there. And I would, especially now, be everywhere, especially at home now, because some of us are back to work. What have I got? Car sales down 30%. So I think, if you're selling cars right now, it's going to be a very, very hard time to keep those numbers up and going. People are just not sure of what's happening in the future. And I think the last thing people are going to be doing is going out and buying a new car, especially if they have to borrow money for it. So I think you're going to be the car industry is going to have a big shake up for sure. KiwiSaver loses 35%. I'll get onto the share market. I'm doing that now, I suppose. But yeah, I believe that the KiwiSaver is going to lose a lot of money, and of course you can't get out of it because you're locked in. It's locked into hedge funds, which is just a share market anyway. And so there's going to be a lot of people that are going to be counting on their KiwiSaver to buy their first house or retirement. And by the time they can actually get it out, there won't be much there. But that's what happens when you get a huge downturn. Also, I think you're going to get a great time to buy shares. So obviously the share market has bounced back. Now, normally what happens in any kind of downturn throughout history, and it never changes, is that you get a sudden downturn and share markets and stuff will drop by 30 to 40% normally. And then you get a bit of a reprieve where there's a period of time where people start to think, I'm going to buy some shares because they're so cheap. It's not as bad as we think. I think we're going to be fine, and everybody's in this kind of false feel-good type of scenario, which we are in right now. And you'll see share markets around the world bouncing back. Also, of course, a lot of the money printing that the governments are doing is going into the share market. It's got to go somewhere. So a lot of it finds its way to the share market. I even heard stories just recently of people getting their paychecks in America to $1,200 and putting it in the share market because they think that $1,200 is not enough, so they need to try and make that 10 times X or whatever, so they're gambling it on the share market type scenario. So I believe you've seen the share market bounce back, and over the next few months it actually might not be a bad place to put some money. I mean, I wouldn't put anything in there, to be fair. I'd be taking it all out, but there might be some gains to be had, I guess. But then you'll see the big fall, and that'll be somewhere probably around that November mark towards Christmas. Will drop significantly, and that's your major drop. And that'll take about a year or so to get to the bottom, and that's throughout history. That's always what it's done. You get the drop, goes up again a little bit, and then the big drop. So if you are in the share market, if you've got a lot of portfolio in shares and everything else, if you are unsure what to do, then again, I'm no financial advisor, but I'd be cashing up and just sitting on the sideline to see what happens. I mean, what's the worst that can happen if you do that? Not much. So just something there to think about. Also, what you'll see a lot of commentators saying is that stocks are something you need to stay in long term, cost averaging and all that kind of stuff. So all the stock market analysis people that you get on the mainstream media will be telling you, do not sell your stocks, keep it there. It's a long-term thing because that's how they make their commissions, and they don't want people exiting the stock market because that's bad for them. So just be wary of that. You also see that it's a great time to buy a house because interest rates are going to go really low, and obviously there's going to be a bit of a drop in price initially, and then so again your real estate and all these things will come from you're buying shares from share market people. Great time to buy a house comes from your real estate institutes, which they want people to buy a house. That's how they make money. So they're not going to say don't buy a house, are they? So you're going to see that. Also, something like young couples with baby made homeless from the banks. And I think there's a lot more of that emotional stuff's going to come out where people have borrowed too much, got way too much in debt for their income. One or both have lost their jobs. The banks are going to give them a bit of a holiday initially until Christmas and then start saying, hey, you need to pay us some money. They can't, and you're going to get all that sob story. So keep an eye out for that. Interest rates go to negative. I think that will definitely happen here. Doesn't mean that your house price or house mortgage will go negative, but the main core lending to the banks will go negative. Retirees can't survive on low interest rates. There's going to be a lot of, I'm surprised there hasn't been more already, but a lot of reporting of people who have saved their money over time and have put it in the bank hoping to get an interest to live on, and suddenly they can't, especially when it goes negative. So that's going to be a hassle, and feel sorry for those people who have done that. Big businesses have to restructure. So you're going to hear this a lot in the next 6 months, is that all businesses now are going through a restructuring stage. And what that means is they're going to cut the fat, get rid of 20, 30, 40% of their staff and start again. That's basically what it means, or go bust. So when you hear businesses restructuring, that's just a polite way of saying, Christ, we need to get rid of some staff and some costs. 25% of businesses closed. And I think this is a kind of a figure that I think you'll find that either from not reopening or in the next 6 months or even 3 months because of government subsidy finished and everything else, you'll see up to 25% of businesses either not reopen or closed. And that's just a fact of life, and it's just a sad fact of life, but we're going to see that. And bankruptcy notice skyrocketing, again, that's just a follow on from that. Main street shops empty. You're going to see a lot of shops now on the main street of your towns that are going to be empty. So rather than 6 months ago when pretty much all shops were full, you're going to see every second or third shop now going to be empty. So that's something you're going to look forward to. Too much debt causes business and home holders in trouble. So most of the trouble that people are going to get into in business and homeowners in the next 6 months is really a factor of too much debt. So if you haven't got much debt, if you're debt free, or you've controlled your spending and you haven't got huge mortgage or credit card debt or anything like that, you're probably going to ride this out not too bad. But the ones that are going to have problems are the ones that just got too much debt, and that's what's causing these businesses to go under. These big name business and everything else, they're just carrying way too much debt. And obviously, in order to service, even with the interest rates as low as they are now, which is the lowest in history, if you've got enough debt, you still can't service it. You still need cash flow, you still need income. So that's going to cause a lot of people problems. Obviously, one of them is going to be tax rises. I think you're going to see some tax rises shortly, because obviously the governments have to pay this somehow. They're borrowing this money. It's not free. They haven't got it, so they have to pay for it. So you're going to start seeing taxes skyrocket. So those of us who are still working are obviously going to have to somehow pay for all these subsidies and extra money being used. So taxes are going to go up everywhere, council, the whole lot. And this is the last one I've got, and I could be out of a limb here, and I don't know, and it's probably my little bit biased opinion, so it might not actually be factual, and I'd like it to be, but it might not be. And I've got National wins shock election. So we've had a leader change now, so that's great. Who knows, they could join forces with the New Zealand First and maybe another party as well to take over Labour. So a lot of it's going to depend on, I know there's so many people out there that love the Labour Party at the moment and think she's doing a fantastic job and a little bit blown away by all that. But I think in the next 3 months there might be people might see some reality and realise that in order to go forward now, we're going to need a government who knows what they're doing, who doesn't make all their decisions by just going to committees and get other people to decide for them, actually have some balls and actually know what businesses need and want, know how to run an economy, and hopefully that might, spur some people to vote the other way. So who knows? It might be just a wishful thinking on me, but if I'm right, you heard it here first. Anyway, that's just my views on what I think is going to see some headlines coming up. Let me know what you think in the comments. Like, subscribe. I think if I do it right, I've got subscribe here and like there, something like that. Watch the next video. Enjoy the rest of your week, and I look forward to seeing you all soon. Bye.